So we're going to talk about NinjaTrader. We're also going to address TradingView. Two different platforms, two different looks, but the methodology is the same, guys. The methodology is 100% the same. And in order to execute, there's one thing that you have to do. You've got to learn to read your charts. You've got to learn to read your indicators. Now, yesterday, we had a fantastic conversation in this room where somebody that's learning the software, that's looking for that consistency, said, okay, Mark, I know that you hand us a plan every day, and I know what the words say on the checklist for entry for the highest probability trend trade Nexgen teaches. The challenge was that there wasn't the comprehension of what the words meant. Like, I know what they say. I know I have to have strong triggers. Guys, it's imperative that you know exactly what that is. Same with termination conditions, same with entries, because when you can do that, when you can learn using a checklist that is provided each and every day, a trading plan is provided all the way from entry to management. When you learn these core concepts, it opens the door for more. When you learn these core concepts, it sets you up to see more trades, to manage more aggressively, to manage more assertively, to know when maybe you want to take a chance or two, guys. You've got to learn to read your charts. And what we do, regardless of the platform, can you guys tell I feel better? I got oxygen in my body. It's 3 rules, and it's only 2 charts, guys. Trading doesn't have to be this big cumbersome clump of indicators and multiple time frames and 1,000 rules and 75 patterns and a dog howling at the moon. It's just 3 rules on 2 charts, and we're going to talk about recognizing advantages, because advantages are what create the trade. Your chart reading, your patience piece, your doing nothing piece is about 90% of your day. I can't stress this enough. You're going to spend a lot of time doing nothing. You're going to spend a lot of time on your hands waiting for those advantages to come in. And the only way that becomes easy is if you trust that the methodology we're teaching right now typically wins more than it loses. If you don't trust it, you're less likely to remain in that 90% stage. So we're going to focus heavily on chart reading. We're going to recognize and understand where the market is likely to continue, where the market is likely to go, and where the market is likely to stop. Now, continuation points, we're going to use those for entries. Where the market is likely to go, we're going to use that for targets. And where the market is likely to stop, we're going to use that to latch our loving arms right around that 90% that keeps us out of trouble. This is one of my favorite pictures, and it really is. It's kind of a gospel truth. The market goes up and down. How's that for intelligence? Whew. Look at the big brain on Mark. So there's only 3 things to do. You can buy when it's going up, trading with the trend. You can sell when it's going down, trading with the trend. Or you could wait. You could say to yourself, I'll wait. I'll wait for something better. When you trust the methodology, waiting becomes easier, guys. So when the market is trending up, what happens is there's almost always a little fight down, like a push, if you will. And when the market is trending down, there always seems to be this little push up. This fight, guys, it's a normal part of market movement. The trend trade methodology that you're about to learn, that you're going to study, that you're going to take pictures of, that you're going to commit to, is pinpointing right where that fight is most likely to be lost. With such accuracy, you're going to wait for it and on NinjaTrader with a limit order. If you can wait for that fight, if you can sit on your hands, if you can relax for a minute, you can take a trade that you can prove wins more than it loses. If you learn the easy trades first, you're going to see more trades. So what I do in this room, for those of you that are kind of new, is I talk about the easiest trade that Nexgen teaches. It's called a high probability trend trade. You guys show me daily that this is a trade that typically wins 70 to 80% of the time. We had Phil in the room yesterday showing us his stats for when he follows rules, and he was like at 75% on TradingView. So you've got to learn the rules, and not just what they say, right? You've got to learn what it means to have that rule true. The easiest way to do that is to practice the rules. To say to yourself, I'm committed to these rules. I want to learn this plan. I want to be able to read my indicators. But as I learn, I realize that I'm new. I'm going to post in the room. Every trade that I take, I'm going to post in the room, and I'm going to say to Mark, Mark, give me a private session. Make sure I'm reading my indicators correctly. Make sure that I'm following these rules that are in the KISS plan, because I know that that optimizes my chances of success. My hope is that you don't practice the wrong trades, because the wrong trades will win. The same way, the right trades will lose. But probability says if you're trading a pattern that you have proven wins more than it loses, you should come out of this as a successful, profitable trader. So we keep it very, very simple. Guys, I'm wound up today. I give you a plan for both platform. I give you one for NinjaTrader, and I give you one for TradingView. They've already been dropped in the rooms, along with spreadsheets and the PowerPoint that I'm using, guys. These plans are not the end-all be-all. I can't stress that enough. These plans are stepping stones in your learning journey. They're designed to teach you to read the indicators, to recognize those advantages, to trust those advantages, to lean on those advantages. The trades in the plan are designed to optimize your chances of success. That's it. To give you the opportunity as a brand new user with very little base to find trades that consistently win more than they lose. Through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. You'll begin to see more. Ron, here comes your nickel. Ron in the room loves to tell you that the high probability trend trade, 3 rules, 2 charts, is not your get-rich trade. It's the trade that allows you to see the rest of the trades. It lets you see the medium probability trades. It lets you recognize patterns outside of trend trades, because you're always thinking in terms of advantages. So keep it very, very simple. And I need you to learn the looks you're going to commit to. When I talk about a trade, whether it is a high probability trend trade on NinjaTrader, whether it is a trend trade on TradingView, I'm going to go to my pictures real quick. I want you to see something. Actually, I want you to see 2 somethings. The first something I want you to see is that I have over 20,000 pictures. That is a surefire way to get good at this software, to take a lot of pictures and really recognize the patterns. Where did that one go? There it is. I made these pictures yesterday. I need to save them somewhere. The market trends. There's typically a fight. You're going to pinpoint where that fight's most likely to be lost and hope that the market resumes the trend. That's it. That's your high probability trend trade on NinjaTrader, and it is the same pattern every time you take the trade. On TradingView, a trend is established, a fight occurs, the trend resumes. That's our hope, 70 to 80% of the time. It's just a pattern. You need to learn the patterns, and once you learn the patterns, trading becomes easy. You will call your shots. You'll know exactly where your entries come from, and you will, without question, understand why you're taking that trade. And hopefully you're taking that trade because the rules are met. Because the rules define a pattern. A pattern can be proven to win more than it loses. That's an edge. It's only 3 rules. This is NinjaTrader. Excuse me. And NinjaTrader says when a rule is met, it shows an advantage. It lets you know that an advantage is in place. So rule number 1 will give you the advantage of momentum. And momentum means that you have a market with such force behind that trend that it's going to be difficult to stop. Rule number 2 says terminations false. Those are those likely to stop the market areas. That's going to make sure that you have room to profit targets. We're just going to call it a clear path. Now I want you to picture running as fast as you can with nothing in the way. The likelihood of you getting smacked in the face and falling on your ass is slim, right? Momentum and path. Giddy up, go, run for the finish line. Rule number 3 will define that perfect entry, that point where the market is most likely to continue, that little bounce spot with momentum and nothing in the way supporting it. These 3 rules on NinjaTrader take two charts. That's it. Big chart and a little chart. Large chart, small chart, for those of you that like to follow along. The large chart is a slow moving chart. It's a broad stroke of a brush. It's very difficult to see change on a large chart. So it only takes one bar to define direction, momentum, and areas. It takes one bar, the most current bar, to let you know that rules 1 and 2 are met, that the advantage of momentum and a clear path are in your favor, that you have them. And once that happens, the market's all the way down here, and you're like, whoa, where's that fight Mark was talking about? Well, you're going to see it on the smaller, faster chart. You're going to see maybe 10 to 15 bars up when this is decidedly down. And you're going to pinpoint using rule number 3 right where the market is most likely to fail on that small chart and bounce and reverse in the direction of your large chart advantages. This refinement chart will allow you to reduce risk and maximize profit potential. And we're using these two charts because you're not in charge. I don't want to be in charge. I don't know about you guys. You know, when your spouse is like, you're not the boss of me. I don't want to be the boss of the market, guys. The large crowd is the boss of the market. The large crowd creates trends because that's what they want the market to do. And the large crowd establishes that momentum because they're excited about the trend that they just created. And the large crowd reacts at areas where decisions are made. That's where the large crowd is likely to enter, exit, reverse, all that good stuff. Small crowd, small chart, these are your fighters. Dare I say the ne'er-do-wellers. And when the large crowd wants things to go up, they give us that shove down and vice versa. Rule number 3 takes advantage of the small crowd, trying to create problems for the big crowd. But when the big crowd's giving you momentum and path, the small crowd typically loses 70 to 80% of the time. This is Norbert. Norbert is the large crowd. Norbert is the apex predator. Norbert gets a tuna when Norbert wants a tuna. This is high probability trend traders. They're like, I don't have to chase down the fish. I don't have to make the kill. All I have to do is be present so I can take advantage of everything Norbert creates. That was for you, Ron. So we're going to use a couple indicators so that you guys can prove your rules to be true. The first thing that we're going to use, and man, this is, I'm telling you, if you look at Fibonacci, it'll blow your freaking mind, because Fibonacci and these areas on your chart are where, oh no, where's my NASDAQ? Because NASDAQ was putting on a clinic this morning. I may not have it open, never mind. These areas, large chart or small chart, they're bouncy. That's it, they're bouncy. This is where the large crowd is going to make decisions on that high time frame. These are the areas where the small crowd is most likely to fail on that smaller time frame. And I want you to see something just really freaking cool. Those lines can define a range. Those lines can create big ugly bounces. Those lines can reverse the market completely. And look at how the market seems to go right to them. One of my favorite phrases, not really, I think I've got a bunch of other favorite phrases, but I'm going to pretend like this is it. The market respects these lines because the market created these lines. These lines are all coming together based on previous movement created by the people in control. So they tend to respect them. So we're going to use areas on both charts. And then trigger lines are going to give us clarity. Trigger lines are going to let us know when rules are met. So you have small triggers and large triggers. And it's really, that's about as in-depth as you need to get. Small triggers are a fast-moving average. Large triggers are a slow-moving average. We're going to use them to define momentum for rule number 1. We're going to compare them to those bouncy areas to make sure that area isn't behaving as a termination condition for rule number 2. And we're going to use these large triggers. We've got them from both charts on your entry chart And they're going to pinpoint right where the small crowd is most likely to fail and give you these amazing freaking entries. And we're going to do it with 3 rules. That's all it takes is 3 rules. So we're going to break them down individually. I'm going to encourage you, because I'm an encouraging sort of fellow, make sure that you understand the basic concepts before you try to make things complicated. So when I go through the basic rules, guys, I've also provided you a spreadsheet that give you a visual of exactly what it means to have the rules met. And I've also given you on the spreadsheet a visual of exactly what it means to not have those rules met. Know the difference so you know when to be patient. On the spreadsheet is over 400 pictures of clients taking trades using the pattern, presenting them in the room for feedback. And when they are so kick-ass I just can't stand it, I steal them and put them in the spreadsheet for you to study. As we go through, guys, take pictures, put them into your personal trade setups. Track your progress every day. That's the path to getting to where you want to be. So rule number 1 is a pretty easy one, shortest lesson I ever give. Rule number 1 says the large chart needs strong trigger lines because I want the advantage of momentum. Strong trigger lines is one look. In an uptrend, when the background is green, small and large triggers will be green as well. In a downtrend, when the background is red, small and large triggers will be red as well. Strong triggers means that in that uptrend, smalls have broken above and away from the large triggers. On the very first bar, there has to be space between those trigger lines. In a downtrend, the triggers are red. There's separation. Separation is strength. Write that down. Because when you have that separation, you have strong triggers. And when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And when you have that advantage, it's a market that's very difficult to stop. It's a market that has a better chance of breaking those key areas. And man, with all those advantages, those tails on your large chart, that's that fight on the small chart. You're going to use that momentum, that big push, to pinpoint right where those failures are imminent. Those are going to become a great study tool for entry. So if separation is strength, no separation is weakness. I can't make it easier than that. Separation is strength, no separation is weakness. When I have strength, the odds are favorable. When I have weakness, anything can happen. It's indecision, guys. When I have weakness, that's where the market is more likely to reverse from the middle of nowhere. When I have weakness, that is where key Fibonacci areas are more likely to hold. And I'm sorry, if you're a NASDAQ trader and you're trading into areas, you're getting slaughtered today. But if you're looking now and you're like, whoa, I've got momentum and my path is clear to the next area, you're probably looking for an entry, waiting for an entry, waiting for that fight. Guys, strong triggers lead the way. Nothing in the way is the way. Not trading into lines, not walking into walls, not running into bricks. Guys, when termination conditions are false, when there are none, you're going to have room to make money. That's the goal. And we're going to call it a clear path because the clear path is a very simple way to paint a picture that says there's nothing in front of me. There's no problems, no bouncy things. And guys, clear path is pretty easy. Again, I lean on phrases. Separation is strength. Here's your phrase to define a termination condition, to know when it's time to sit on your hands and relax. If your price bars reach an area of resistance, that can be Fibonacci resistance, divergence highs, yellow 1-to-1s. If the market is trending up and hits a line, you're just going to say, where are my triggers? That's it. Where are my triggers? When price reaches the area, the large crowd's going to start making decisions. Trigger lines are going to tell you what the decision is most likely to be. And if all of your trigger lines, all 4 lines, remain below an area of resistance, that is a textbook termination condition. That's an area that could stop the market, that could reverse the market, that could create big, nasty, untradeable bounces that drain your account. Price comes all the way down to Fibonacci support. The triggers remain above. That's a termination. Jen, just do me a favor. When you come back, Repost them instead of making me chase them, but of course, you will get all the feedback you could ever hope for. You bet. Hope everything's good. Price reaches an area. I'm done with price. Don't need price. Price means nothing. Price is irrelevant. The large crowd already got there. Trigger lines tell the story. No triggers through. Rule number 2 says absolutely no trades into the area. I will not buy that little pullback hoping the area breaks. I will not sell that little pullback hoping the area breaks, guys, because 60% of the time these things work every time. There is no reason to trade into a line. You know where it is. You saw it before the market get there. I mean, for the love of fuzzy. And if you traded into it, your day is over. Look at that. I mean, egads and little fishes, guys. How more accurate do you need to be? Buy low, sell high. You know exactly where high and low may be. So, no triggers, no trade. Everybody cool with that? And I'm telling you, you learn this, it'll change your life. Areas break. They have to break, or we get caught in those ranges for years, and nobody wants to do that. So let's go through the process of an area as it breaks. This is just a picture taken from the market, guys. So the market's coming down, the sellers are in control, life is good, maybe some of you got short, and then price reaches Fibonacci support. And when the price bar reaches Fibonacci support, everyone in this room, because you're all amazing students, says, hey, where are my triggers? And you can see that all 4 triggers are still above Fibonacci support. And in that moment, support has the potential to create a bounce, to reverse the market. Guys, I don't know what the reaction is going to be. So I choose, because of rule number 2, to wait for the reaction to see what happens. If the market is going to break that key area, remember I said momentum is a key factor in breaking areas. Your trigger lines are going to tell you the story. And now here's the most common mistake. We're going to try and clear it up. Day 1. If price peaks below an area, the area is not broken. If you get half a bar below the area is not broken. If you get an entire bar below the area is not broken. It's not price. It's triggers. So if your small triggers smash through an area, 50% of them, both small, but 50% of your triggers, the large triggers, remain above that area. This look says, hey, that area has the potential to break because of that momentum. But there's a pause sign because it's only potential. It's not a clear path, which means it's not high probability, which means it's going to have to be managed assertively. The second trade on the plan that I gave you is that 50-50 trade. And there are some very key concepts to finding success with it consistently. If you don't understand strong tops or bottoms, you're going to struggle. If you don't understand momentum, you're going to struggle. If you don't know that divergence is a loss of momentum, you're going to struggle. So there's some key concepts that come from the first trade that'll help you recognize, whoops, didn't mean to do that one. It'll help you recognize the potential of that area, and it'll give you an opportunity. This is going to be most of your trades. You're going to use your chart reading to manage them. Once all 4 trigger lines get below an area of support, that area of support is broken. Your path is now clear. And if your path is clear, support will behave as resistance. Now, I mentioned that the price bars have nothing to do with it breaking. Guys, the color of the fib has nothing to do with it breaking. Whether it's a yellow fib, it's not clear until the triggers get below. If it's a hot pink fib, it's not a clear path until the triggers get below. Heck, if it's a black fib, it's not clear until the triggers get below. But once they get below, your path is clear, and it remains clear until you reach the next area. Everybody good with that? All you're going to do is count triggers. So here's your trigger count and cheat sheet. No triggers through. The plan says absolutely no trades. That's a termination condition. Let's wait for the reaction. Only 2 of the 4 triggers through. The plan says not yet. That's not your best look for a breakout. I'm here to help you avoid trouble. Sit on your hands. If it's really going to break out, the 3rd trigger is going to get above. That's when the potential for the breakout is highest. That's when you have the best chance of success. That's when the KISS plan gives you an option for entering. And then once all 4 triggers are through, that's when the path is clear. See, Robot, I didn't see your annotations. Loss of unknown reason. So when you go through, I know you like to write a lot. I want you to ask yourself, did it have momentum? Did it have a clear path? Did it have a defined entry? If it's the perfect trade, it's a cost of business. If you fudge the rules, then it might be a rule fudge. So make sure you write those rules on there. We will go through it and look at it though. Guys, there will be times, and you may have, but that's kind of a good little for everybody. If you're leaning on the advantages, you'll know if you took the right trade. There will be times when your path isn't clear because of stacked areas, because the market is caught in between a set of fibs. Guys, this is 90% of your day trading futures, but the futures market trades collectively, on average, about $220 billion hourly. You don't have to be the first one in, not to find your goals. You don't have to be the last one out. You don't have to fight a trend. You don't have to fudge your rules, guys. You need to find a way to consistently make $400 a day, consistently, over the course of 252 trading days, because that's a 6-figure income based on your trading. Is there anyone in the room that's been with me more than 2 weeks think that they can't find $400 a day using this methodology? I think most of you would say, absolutely, Mark, it's no problem at all. The problem, Mark, is that I fight triggers sometimes because I get tired of waiting. The problem, Mark, is that I trade into lines hoping they break because sometimes I get bored. Mark, sometimes I enter from the wrong side of the triggers because I'm afraid the market's going to go without me. So guys, stay focused on the best of the best. Give yourself the highest chance of success. When the large chart says you have the advantage of momentum, that market's going to be tough to stop in the direction of the trend. When the large chart says there are no lines in your way, there's nothing in the way on a bigger picture to create a bounce and upset your trade. So we're going to go to the small chart, the fast chart, the refinement chart, the small crowd. We're going to go pinpoint our entry, guys. And we're going to use rule number 3. And again, language is important. You should steal this from the PowerPoint I gave you. You should print this page out. You should put this page on your desk. You will never miss your high probability trend trade entry because you're going to use a limit order to buy or sell a pullback at an area inside of triggers. That's the phrase to define your perfect entry. Good morning, Miss Trina. You're going to use a limit order. You're literally going to wait for the market to come to you. That's the accuracy of the methodology. You're going to buy or sell a pullback. That's that small push against the large chart trend. It's going to start with a reversal bar. You're going to do it at an area, at a fib, at a mid band, at a yellow 1-to-1. Learn this list. Those are your 3 options. And that area will be inside of triggers. And that's, I think, the most important part because your large triggers are going to show you exactly where that pullback is most likely to go. And when you have areas inside of those large triggers, it's going to show you right where the market is most likely to bounce and continue with the large chart. It's just a pattern. When the large chart says up, when the large chart has a clear path, our guts are twisting. Oh my gosh, the market's going without me. Oh no, I'm never going to get a trade. It's going so fast, there's nothing in the way. And then the small crowd magically shows up more often than they don't. And they give us a reversal bar. And that reversal bar signals the beginning of the pullback. It says, hey, the fight is on. Your large triggers, large and synthetic, so the smooth ones are from the small chart, the stepped ones are from the large chart. They work together. These moving averages show you where the retracement is most likely to go. Price returns to a moving average. Regression of the mean for you mathy people. But moving averages aren't bouncy. They're like clouds to a skydiver. You need an area. You need Fibonacci support. You need a green mid-band for a long trade. You need yellow 1-to-1s. One of those. None of them are more important than the other. You need one inside of those triggers to define your amazing entry. Sometimes you'll have multiples. Sometimes there's a mid-band up here and 1-to-1s down here. I have no idea which one's going to create a bounce. They're both likely to create a bounce. Because of my large chart advantages, because of all that momentum and nothing in the way, I'm going to activate a limit order. You're going to activate a limit order just above the highest point of support. And you're going to say to yourself, as long as I'm in the retracement range, I don't care if it pushes against me, because as long as I'm in that retracement range, the advantage of rule number 3 is still in play. Absolutely, positively, without question, on the KISS plan, there are no entries taken from beyond the trigger lines, the retracement zone. Once you get below them in a long trade, you don't know if, when, or where the market is going to go up. This is where the market should not go. You're going to learn to ignore these lines. In a downtrend, when the market is pushing, the momentum is strong, the path is clear, the fear of missing out is real. Small crowd shows up and says, hey, let's push this thing up a little bit for the Nexgen users. And you Nexgen users are going to say, rock on. I know exactly where that retracement is most likely to go, somewhere from the bottom to the top of those large triggers. And the Nexgen user will say, I know exactly where the market is most likely to bounce and continue with my large chart advantages. And because I am so freaking smart, and this methodology has been proven and tested and verified, I will activate my limit order just below the lowest point of resistance. And I will enter my high probability trend trade, full knowing that my advantage is in play. Good morning, Cav. Until I get beyond the top of those triggers. This is where the market should not go. Absolutely no trades are taken on the KISS plan from areas beyond the triggers, because once it gets there, hey, Toki, welcome to the room. Nice to have you. We're talking about high probability trend trades, man. We're talking about accuracy and methodology, and we're talking about understanding where the market is most likely to continue with such kick-assness. That's a word, guys. That your initial stops will be placed where the market shouldn't go. And you're going to say to yourself, if the small crowd can push beyond the areas inside of triggers, if the small crowd can push beyond those triggers 4 or 5 ticks, I choose to exit the trade. I choose to no longer be in this high probability trend trade because the advantage of rule number 3 is no longer in play. Now, you mathematicians, help me out. If a methodology can be proven by you through study to win 70 to 80% of the time typically, how often does that trade have to lose? Somebody help me out. I suck at math. What is that? It has to lose what, like 90 to 130% of the time? Nobody wants to play along? That's cool. I'll help you guys out, guys. 20 to 30% of the time, you're going to take it on the chin. 20 to 30% of the time, you're going to lose your trade. 20 to 30% of the time, it is a cost of doing business. If you can prove something wins 70 to 80% of the time, you're not proving that you get to pick the winners. There is a random distribution of wins and losses. That might be your first 10 trades. That might be your second 10 trades. That might be your last 10 trades. I never know if a trade is going to win or lose, but what I do know is that if I follow the plan, the methodology, if I trade the pattern, probability says I should be more successful than I'm not. And this is your pattern, guys. With momentum, the potential to break, buy a pullback to an area inside of triggers. Want to hear me complete in the weeds read of this chart. What does that mean, Wayne? Why? Why even do that to me? How is that helpful? Momentum, potential to break. I got you, Wayne. Don't you worry. I got you. I love deciphering your charts. Don't leave anything out. Don't write me a dissertation. Pull back to an area inside of triggers. I'm messing with you, Wayne. I got you. That was from 2021. Momentum, potential to break, pull back to an area inside of triggers. Guys, that was from 2022. I triple dog dare you to go to the client trades and click on one. And sure enough, it's momentum and the potential to break and a pull back to an area inside of triggers and go, wait a minute, was he serious about this pattern thing? Whoops. There's no way the market does the same thing so many times. Or does it? Momentum and clear path and pull back to an area inside of triggers. Guys, when I tell you what you're learning is a pattern, I mean it. Learn the pattern and see the rest. Are there any questions about the high probability trend trade? Cool. Let's go to TradingView. What's TradingView, Mark? Well, TradingView is just a platform, the same way Ninja is. TradingView is a place for you to run your T3 indicators to take a trade that you can prove wins more than it loses. TradingView conveniently only has 3 rules for a trend trade. TradingView also very conveniently only uses 2 time frames to make those trend trades happen. 2 charts, 3 rules. Guys, show me something easier. I would love it. Your large chart is a 15-minute chart. Man, that thing is slow. 15-minute chart will define direction, momentum, key targets, areas that can stop the market. It's the big crowd. Your small chart defines immediate strength and defines your entry points. Now on these minute bars, the immediate strength becomes important. Those small triggers are immediate strength. You're going to learn how to not fight them. The methodology you're about to learn, my friends, I don't care how long you've been with us. If you've been with us since 2004, 2005, you remember that Nexgen was teaching people to recognize trends, to wait for pullbacks, to get to areas, and to find that trend trade to go with the trend, guys. The methodology is nothing new. It's just prettier. So on your large chart, you'll have triggers. Just small triggers, no large triggers, no background colors. I am a simpleton. I have removed all the noise off of this chart to make it easier to read. Your small chart will have small and large triggers. We're going to use that momentum for what we call a momentum trade. That's the second trade on the plan that I give you. And the cool thing is that if you're not a momentum trader, I don't think you even need those triggers. That's up to you. TradingView uses areas, T3 indicators, lines on a chart that can create a bounce. You have to believe they can create a bounce. Otherwise, you're going to struggle with the methodology. The description, and guys, you do have this PowerPoint, lets you know how these areas can be used. And now the trend trade. The best chance of success, the highest probability, the best of the best, the one that teaches you to recognize the trend, that teaches you from trading into areas. Your first 2 rules are the same rule on different time frames. And then to buy or sell a pullback in an area. Not fighting the immediate small trigger strength to make sure that you have the highest chance of success, guys. Defining trend is pretty simple. On the 15-minute chart, your triggers are either up or they are down. Small triggers. If you've added the large triggers to your chart, you got noise you don't need. If you have background colors on your large chart, you have noise you don't need. Small triggers are either up or down, guys. That's your trend. It's either up or down. Rule number 1 says don't walk into a wall. If you're going to take a trade, make sure that your large chart has room to trouble. That's it. If my trade's down here, I have room to trouble. If I enter a trade right here, I'm at trouble. It's got nowhere to go. Rule number 2 says the same thing. Don't enter a trade directly into something that could create a bounce. Don't enter a trade into an area of support. Don't enter a trade into an area of resistance, hoping that shit magically breaks. Pardon my French. Rule number 2 says give yourself room to make money. Give yourself room before the market hits something that can create a bounce. Give yourself reaction time. And then your entry is just a pattern. And guys, there's a very specific thing. When the market is going up, when the trend is up, when there's nothing in the way on the big chart, the fear of missing out is very real on the small chart. The moment your small triggers roll down in an uptrend, you can look lower. You can look lower. You can look for a mid-band, for zones, for one-to-ones, and you can say in your big, strong, scare the dog voice, my trade has to come from here. And if it doesn't get there, it's not my trade. And when price reaches that area, there's a very specific look. You want an up bar, a bar in the direction of the trade you're looking to go, and you want both corners of that bar to finish above those small triggers. Small triggers are immediate strength. By getting above those small triggers, you're no longer fighting the immediate strength. This is where the small chart is most likely to reverse in the direction of the large chart advantages. Even against the trend, it's the close below the small triggers that sends you to your awesome entry. So 2 chart pattern. What did I just say, Victor? Watch this. The rules say both corners of the bar above the line. That's it. If you want to write a different rule, knock it out. But I'm trying to keep you guys from getting your asses kicked. What are you saying? What if the price is at the line, one corner? Is it above it? Then no. It doesn't have to be a bunch of gray. But Victor, you're also at a point where you don't trade the plan 100% consistent. And that's okay. You're at that point. If I don't have both corners visibly, without question, above those small triggers, my rules aren't met for a trend trade. Why? Is it because Mark wants to keep you out of trades? No. It's because when only one corner of the bar, let's see if we can find an example. If only one corner of the bar is above the triggers, it's not uncommon to see the market spike back down or spike back up. And I don't see any just jumping off the page right now. That was a big push down, wasn't it? So Victor, I'm not trying to keep you out of trades. I'm not trying to shackle you to missing opportunities that you think are present. The highest probability way to trade this trend trade is to let the market finish the bar above the triggers without creating a bunch of variables that get you into trades. Because hell, if that's the case, why not just enter at the area and hope you don't get run over, right? That's a safeguard, a blanket rule designed to optimize your chances of success as you take these trend trades. Here's your pattern. Triggers up, room to trouble. Then and only then do I go to my small chart. I have to wait for the fight. Small triggers signals the beginning of the fight. So learn the phrase, because the smalls rolled down, my rules say, wait for a pullback to an area with a close on the correct side of the triggers. There's your pullback. There's where it finally gets to the area. There's the close above. Victor, there's that one corner still in the line. And it went right to where it was supposed to go before it went up. That's your entry every time. Triggers are down. Path is clear. Because the small triggers rolled up, I wait for the area. I enter on a down bar with both corners of the bar that finish below. Now guys, again, I'm going to say this, and I'm going to say this out loud, and it's important that you guys hear this. This plan is a stepping stone in your learning journey. If you present a picture in this room, Victor, where one corner of the bar is not above the area or above the triggers, I'm not going to beat you up for it, but I'm going to say, hey, did you notice? This is a situation that could potentially cause problems. And you're going to say, oh, yeah, I know, but I chose to go. That's totally cool. Guys, once you learn to read your indicators, once you start to see more, you will start to do more. This is such a remedial 101, bare bones. Let's find a way to be successful with the fewest moving parts approach. You will grow from it. If you don't, you're not studying. Triggers are down. I have all the room in the world to trouble. The only thing I'm lacking is a pullback to an area inside of triggers. So I could say to myself right now, I have to at least get to there for rules to be met for a trend trade. And guys, I don't even know if it's going to get there. But if we're being completely honest with ourselves, that's the first opportunity spot for a trend trade. Does that make sense? Because I know my rules, I call my shots. Because I know what has to happen, it's easier to wait for it to happen. Woo, look at that. That's the NASDAQ. All right. Let's go see if there's any truth in advertising. Momentum, 4 triggers below, hasn't reached. Pull back to an area inside of triggers. Do you guys see it? That's your magic. Into a termination? Not my money. Hold on. 3 triggers through. All the momentum. Pull back to an area inside of triggers. What's going on, Tesla? Good to see you. Surely this doesn't work more than once or twice a day, right? Hold on. All the momentum. I believe that's 3 of the 4 triggers through. Son of a gun. Pull back to the area inside of triggers. That's where the market starts down. That was a termination condition. We can't do that. That's not our money if we're following the KISS plan. Are you guys seeing it? Like, I'm not making this stuff up. This is a live market doing live market things. This isn't the Nexgen, let me cherry pick and hope somebody believes what I'm saying. This is literally a live market. This is crude oil with momentum, with potential. What did that little tail do? I can almost guarantee it didn't give us an entry, but let's go look. Nope, missed our mid-band by a couple ticks. Dang it, sometimes it's not ours. Momentum, nothing in the way. That one might have gotten you. That one might have gotten you. That's a pretty good look, huh? Momentum, look at that. What's it look like over here? Son of a gun. There it is again. So, I know, I'm like, Mark is so smug. Why does he think he's so smart? Guys, because I have taken an ass kick in every way you could take an ass kicking with the software. True story. But I've also learned how to fix it. I've learned how to correct my mistakes through coaching from John Novak, and I've put myself in a position where every time I look at my chart, I don't worry about the trade. I worry about the advantages. I know the recipe for the perfect trade. If you don't know the recipe yet, that's cool. You're new. Give yourself a little bit of grace. We'll get you there. But you've got to learn momentum, path, and entry. That's your high probability trend trade. If you put the study into momentum and path, and you're going to see it in this room a lot, you're going to find more creative ways to capitalize on the software. If you look at your chart and you say, wow, I'm missing one of my 3 core advantages. 1/3 of my foundation is gone. 33% of the good stuff has left the building. Well, then I'm in a medium probability scenario, and I may have to manage that trade a little more assertively. I might have to get break even a little faster. I might have to take profits a little bit quicker. And if I look at my chart and I say, son of a gun, 2 out of 3 are missing, I have to make a choice. Do I really want to enter the market on what can only be described as a low probability trade? And if I do, and some of you will, and I'm totally cool with that, guys, be you, whatever makes you happy, I hope that you understand that you will have to manage that trade assertively. I want your guard up. This is some dark alley stuff, guys. Have one in the chamber. You control the entry. Nobody's going to make you enter the market. There is no do we enter here. I choose to pull the trigger. When I know what's working for me and against me, I make better decisions. When I believe in the advantages, I make better decisions. When I know an advantage is gone, it helps me make decisions on how assertively and aggressively I need to manage that trade. Guys, this is your core. And from this core, there is a lot of growth around the corner from you. But if you sidestep these very basic concepts, what happens is you start trading into lines because you really thought the momentum was good, right? You take that long trade because that green line was inside of triggers. That's an incomplete understanding of amazing rules, guys. So go through, learn the basics, ask a million questions. Know that Fibonacci will show you exactly where problems exist. And guys, we're in a little bit of a range right now. And until it gets to one side of those lines, chances are trading's going to be difficult. So I'm going to take 5 minutes. When I come back, we are going to start looking at the charts that you guys posted. Couple things I need you to know. Number one, none of you have a badge. None of you are the trade police. It's nobody's job in this room to tell somebody that they're doing something right or wrong. I won't even tell you that your trades aren't the right trades. I will tell you if you broke one of those 3 rules, because I want you to recognize it and I want you to have your management hat on. That's it. So if I say, oh, Ron, you traded into a termination condition, it's not because Ron's wrong. It's because I want to know that Ron knows that that termination condition could create a bounce that could cost him money. Was he prepared to manage? So as you post in my room, see how I got pretty possessive on the room? When you post in my room, guys, I don't ask a lot out of you. I don't call you in the evenings and make sure that you're studying. I don't send your wife a message going, hey, make sure they're on simulator as they're learning this. All I ask is that you describe the momentum on your chart. And I encourage you as a brand new user, use the language, smalls below large, colors match, strong. Why are they strong triggers? This is why they're strong triggers, because this look pairs up with those words. And the more times I write that, the easier it becomes to read my charts. Describe your path. How many triggers made it through the last line hit? Was it 1? Was it 2? Was it 3? Was it 4? Because if it's only potential, you've got to manage a bit more assertively. That's it. I'm not saying 3 triggers through, don't take the trade. I'm saying get your management hat on. Make sure you know that things could go wrong for you. Define your entry, and I encourage you, use the language. Buy or sell a pullback at an area inside of triggers. Learn that phrase. You'll never wonder where your trades come from. So if you're on TradingView or a NinjaTrader, that's my request. It's a pretty easy request, I think. Be active in your education. If you're on TradingView, do the same thing. Tell me what the trend is. Describe if you have room to targets. Tell me where you entered. And as you learn the methodology, use a lot of the words that are going to make it easier for you to see your pattern before your pattern ever presents. Now, Nexgen gives you the tools to be successful. Nexgen teaches you to read your indicators. Nexgen gives you everything you could ever possibly need to be successful with the software. This is a true story. I'm going to read this. This was written by John Novak in 2008, guys. This is, I stink at math, 18 years old. And it rings true today. Nexgen will supply the Fibonacci-based software. Can I send the link to the daily chart cleaning? I will, Marika. Here, I'm going to do two things for you, Marika. Everything you could ever hope for with Nexgen is going to be on the t3.com website. Once you go to resources, the user guide, this is going to answer all the ninja stuff, chart templates, changing trigger lines, automatic trade stat, all that stuff, adding symbols, rolling markets, deleting all the good stuff. It's this one right here, Ninja 8 Best Practices. That's going to help you optimize your computer to run that Ninja Trader. So there you go right there. Let me know if you have any questions. But I would save the Nexgen page to favorites. Put it in your bar, because you've also got instant resources right here. What are the indicators? How do I define momentum? What's a termination? How do I get an entry? What's a high probability trade? Oh, look at that. Stuff on management. Literally everything you need, guys, is provided. Nexgen supplies the Fibonacci-based software and the trading rules along with the coaching, that's me, that will increase your odds of winning more than losing. After you choose Nexgen to be your technical analysis partner, don't worry about how long it'll take you to become a profitable trader. Worry about the process of learning, posting in the room, tracking your progress, taking pictures. Remember that simulation of your trading plan is not trading. It is practicing the movements of trading until they are so ingrained in your muscle memory that you no longer have to think about trading your plan consistently. Your simulator is the driving range. You're doing great things so that when you actually play golf, your body knows what to do. Your second goal, and I think 99% of the people that are new to the software fall short here. Your second goal, news coming up, thanks Pablo, is to simulate 25 of the exact same trade setups. So, for instance, simulate 25 trades where these are the only rules that you're following, because what you're doing is you're committing it to memory. Write down using screencast, right? What could I have done better? Guys, if you're not sure what you could have done better, post in the room. I'll give you all the feedback. I'll tell you exactly what went wrong or what was great. Post in the room. And guys, look at the feedback. Go study it every morning. Everyone's different. It'll take time to become unconsciously consistent. So the more you complete 25 of the exact same trades on simulation, posting charts for feedback, and following your plan without deviation, distracting thoughts or hesitation, the closer you are to becoming a profitable trader. You will not have to win all 25 trades, guys. If you win 15, lose 10, you should still be a winning trader if you manage your trades correctly. Use a prop firm. If you can't do it in the prop firm, go back to Sim for 25. I'm paraphrasing, but here's the one that I really want you to take to heart. Nexgen provides analysis, rules, and coaching. That's our job. Only you yourself will be responsible for becoming the profitable trader. So it's up to you to learn the rules. I'll give you coaching all the way, but it's up to you to learn the rules. It's up to you to simulate and try to follow the rules. Post them in the room, get feedback. It's up to you to learn the patterns. I can't make you do that. You are my horses. I have brought you to water. I am here to help, but it's important that you do your part. That's what the posting is. Tesla says, never leave your computer on in a move. Buttons could be hit and accounts blown without even knowing it. $300 lesson, but hey, you're back. So how do buttons get hit? Do you have pets that walk on your computers? Or do you have a ghost in the house? That's spooky. Movers. Ah. Darn movers. There goes their tip. All right, guys. So we're going to look at all of the charts. And we're going to read the charts out loud. And we're going to see what's going on. If rules are met, guys, I have no hesitation to pull the trigger in the room to talk through what we're doing. If rules are not met, I have no hesitation sitting on my hands doing absolutely nothing. So Vance on Ninja Trader, it's a 13-2 large chart. It's a 5-1 small chart, and that is a description of the size of the Renko bars. So One full bar from top to bottom on a reversal bar is going to be 28 ticks. 13 each direction from center, and then 2 ticks creates the next bar. On a 5-1, the full bar, full reversal bar from the highest point to the lowest point will be 12 ticks, or 11 ticks, excuse me. 5 ticks from the center each direction, and then 1 extra tick creates the next bar. On the NASDAQ, it's a 34.5, and a 13.2 is your smaller entry chart on the NASDAQ. Because on the NASDAQ, these guys are like methed out weasels. They move so fast that we had to up the time frames to even have a fighting chance of keeping up with the movement. And I'm going to tell you, and I don't give trading advice, but I will tell you from experience that the NASDAQ is too fast on Renko bars for 99% of the world until they are so in tune with their plan that they dream about it, or that they stop dreaming about it. All right, guys. I'm going to go away for 5 minutes. When I come back, we're going to click on all the charts posted. We're going to do live reads. If the rules are met per the KISS plans, we'll take trades just for poops and giggles, educational. So if you have pictures, post them. If you have questions, ask them. I'll see you in about 5 minutes. Guys, I'm back. So Nathan, I can't make it happen in a live market, but let's start right here. Let's see if if crude oil wants to still go up. Actually, let's see if we can find a faster market. All right, you ready? 2 triggers through, right? 3 triggers through. See the most current price? This is when we're doing it. If this line right here is really going to break, Nathan, Hold on. Come on. Push for me. It's still only 3. It's only the potential and not even with a lot of momentum. If the market continues to push down, I like this. We can watch it live. Yeah. Unfortunately, when you ask for a live market, I can't make the live market. This is the ES. I can't make it play along, but you can still count triggers below the line, right? So you don't need a trade. Trigger lines is not a trade. Trigger lines is defining a termination condition. So it's got 3 triggers through, but there's not the momentum that I need to push it. Rule number 1's not met. Oh, I see what you're saying. Cool. Let's do this. It's going to be the same every time. Price reaches resistance. How many triggers are through resistance? Work with me, guys. Does everybody? It looks like 4 triggers are through resistance. Stop worrying about momentum, Nathan. Stop worrying about momentum. You're defining termination conditions right now. If you don't learn the individual pieces, you're going to keep doing what you're doing right now. So let's do this again. This is important. Most current bar. Price reaches Fibonacci resistance. No worries. Well, it's always the most current bar, right, Nathan? It's always the most current bar. All right, so here we go. Bum, bum, bum. Uh-oh, let's back it up 1. Son of a bah. Price reached a divergence high. And there's no triggers through. So Nathan, this is a very important lesson, an important lesson for all of you guys. This line is the line now because price reached it. Does that make sense? We don't care about resistance anymore. This is my new line. This is my new line in the sand. Boom, boom, boom. Uh-oh. It took about 3 bars, but now the small triggers have broken above that line, and the small triggers are through. This is your kind of crappy potential look. Does that make sense? Cool. And if the market's really going to continue, this is what gets people. This is where people go, cool, I have 3 trigger lines through. Nathan, are there 3 trigger lines through the divergence high? No, sir. We're still at 2, right? And the market goes, duh, duh. Now we're 3 triggers through. Now we might be looking for an entry. Now we might say, man, I sure hope. Where's 847? So we're about right. Hold on. We're about right here. Right? 3 triggers through, all the momentum. And if I'm not mistaken, and that's it. If there's no divergence on the pullback, we'll probably wait somewhere right here at an area inside of triggers and see if we can't find a trend trade based on that momentum and the potential to break. Are you with me so far? Now I'm 4 triggers through. But look at this. You see the tail? Do you see the box that we made? Boing, dong, 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 dong. That's it, man. So first it's momentum. Without that separation, I'm not even counting triggers. And then it's counting triggers, making sure that I've got the potential to break that area. And if it looks good, it's a pullback to an area inside of triggers. Bam! And that box is right at the tail end of that bar. Has nothing to do with the bar. And that is splitting hairs. So let's do this. Are you ready? If it's right there, do you want to say, that's close enough? No. Does that make you feel more comfortable? It should. But what if, no, it's above, right? It's decidedly above. That's it. That's all it takes. Let me see if I can find a look where, do it with some momentum. Let's see if we can find a look. What if it's laying directly on top of the fib? Like, what if it's not above it, but it's not below it? It's sitting right on top of it, Nathan. Are you cool saying, I can't freaking tell if my rules are met? I can't tell if it's 3 triggers. So I can hope, right? Or I can say, give me one more bar. Well, that one didn't work out, but give me one more bar. Give me some definitive looks. Let me know that my advantage is on the table. Look at this. Guys, they're scrambling. Let me know that it's good. Let me know that I've got an edge, that I've got an advantage. So Nathan, when you start counting triggers like that, let me just open this up. Here's a good example of when life, what's up, motherfucker? All right, guys, this is your 90%. Price reaches support. Price reaches support. Steam doesn't kill viruses. No triggers. Still no triggers. Price reaches the next area of support. Still no triggers. Next area of support. Still no triggers. Next area of support. Still no triggers. How many of you have gone through this and said, man, I'm never going to get a freaking trade? Done it. Guys, this happens sometimes. Next area of support. Son of a gun. Cheese and crackers. And now there's the potential. 2 triggers through. The bottom line is the line that we're watching. None of these lines couldn't care less anymore. It's now the bottom line. All the momentum. Now it's 3 triggers through. Life's getting pretty good, right? Boom, 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 boom. It finally breaks. And those assholes hit the 1-to-1s. Guys, this only lasted about 20 minutes. As a brand new user, it's going to be difficult to do it. So absolutely, Nathan, the high probability trend trade, this is a flow chart. I know, you know what a flow chart is, right? Cool. If I have strong triggers, then I will look for termination conditions, and I will couple those two together. So if I have momentum and I have termination conditions, none present, then I will look for an entry. And if you let it go like that, Nathan, if you let it be a flow chart, I have momentum, but because I don't have a clear path, I choose not to look for a trade. Even though my path was clear, I didn't have momentum. I choose not to look at the trade. Well, the beginner can do whatever they want, Nathan. And I'm going to be very, very adamant about that. I won't tell you how to trade. But one thing a beginner can do, should they choose to, is they can follow a plan that has been designed to optimize their chances of success. They can follow a plan knowing full well. So watch this. I like taking pictures and typing out. I just think it does something. I know there is a metric butt ton button. Let's space it out. Of trades that are not high probability trend trades. I am not at a point where I can consistently find the easy trades. Why do I want the hard ones that need to be managed more assertively? I know with study I will find the other trades in time. If you guys wrote that on a chalkboard 100 times as a brand new user, you could make life so unbelievably effortless in your trading. But the problem, the biggest challenge, I'm not sure if I'm going to be able to get to it. I don't know how long it's been. The biggest challenge that new users face, I made the perfect picture for it. And I think I'm going to dub it the John Novak effect. Because you guys all want to be John Novak with his 27, 28 years of experience. And guys, you can't. If I handed you Mario Andretti's race car, you'd put it in a wall. And if I handed you Tiger Woods clubs, you couldn't get eagles, right? You got to stay in your lane. No. I would say that it varies every day, and it's not unusual to find probably 3 to 5 on average, Nathan. But here's the deal. If you just take, and man, here's the better part of that deal. Get on Market Replay, right? And even more importantly, Nathan, how many pictures of strong triggers have you put into this spreadsheet? How many pictures of a clear path have you put into the spreadsheet? So you gotta learn these. And then once you learn those, it opens the door for this one. So you've got 2 trades, and tell me, anybody in the room, if you don't think you could make all the money you'd ever spend with 2 trades. My plan is trend trades. That's it. That's it. That's all I need. So remember, you're not being shackled. What you're doing is you're building up a foundation, an educational foundation that allows you to read your indicators at a level that will entitle you to see more. There we go. There's a fun word. So I'm going to click on today's charts, guys. And I'm going to let Jen come back before I click on hers. Maybe I don't say it often enough, guys. The KISS plan, the basic trade, the high probability trade, it's a stepping stone on your learning journey. I don't expect anyone in this room to only take that trade. I don't think I've ever met anybody that only takes those trades. Almost everybody that uses this software finds some variant, some way of taking those core advantages and turning it into more. The people that struggle are the people that don't learn how to read their indicators first. The people that don't focus on advantages first, but rather money, chasing the money. So Cav says, check it out, Mark. Coming from a bottom, all the momentum, pull back to an area, let's make some money. Oh my gosh, pull back to an area, let's make more money. 2 trend trades, guys, double dipping because the patterns are true. Cav, that's awesome. Rock star trading. Strong side of triggers, they're rolling up. And Wayne takes the perfect momentum trade. Wayne, I saw this one earlier, and I gave you a virtual high five. When the triggers are up, when there's room to targets, Wayne lets these one-to-ones break, and he buys the pullback as it comes to those one-to-ones with strong triggers. Guys, this is a momentum trade. This is a momentum trade. Wayne has virtually no risk and all the room to trouble. Wayne, that is flawless execution on this trade. Really nicely done. Guys, this is in the plan that you can get from the website. Actually, this is the second trade on the KISS plan. Because, Victor, you can't make enough money with your trend trades. I love it. Meh triggers. Come on, Victor. You do what makes you happy, brother. You do what makes you happy. Neither really up or down. Can't define direction. Coming off of the large chart zone, this is kind of cool. So Wayne says these triggers aren't pushing either way, but I have absolutely no shorts in the bag. And then he gets this pattern, this white bar that comes right off of that termination. The next bar opens up. It didn't open up above the HVA, Wayne. And Wayne says, uh-oh, that's a good indication that this market has a little push up from that termination. And nice trade. For the true white bar trade, Wayne, smalls would want to be above the large, absolutely. The second bar would want to open above the HVA, the white bar. And since it didn't, you can see that it pulled right back to the HVA line. That's your cheat code. Is if it opens above, there may be so much giddy up they don't come back. If they don't open above, that's where a little patience on the pullback to the HVA, because it's probably going to come get it. Does that make sense? That's that subtlety inside of a really good trade. And then it's weird to see you take a trend trade. Triggers are up, room to trouble, pulls back to the area. And I like this. Entered 3 seconds too early and it closed below triggers. Man, Wayne, I am the king of not being able to anticipate it correctly. Almost every time I enter up here, it closes down here. I don't know why. It's like it knows. It's like there's cameras in the room. So in just a little bit early, that's okay. There's the true entry. And you were setting your target 1 and it hit it before you could confirm. That's a great problem to have. What a wonderful problem to have. The market comes off of your amazing entry so fast that you can't react, and you're stuck only making $360. That's some solid trader problems. Did I follow the KISS plan? Let's see. 4 triggers passed, all the momentum, pull back to an area inside of triggers, stop where the market shouldn't go, making money on the way down. Joel, I could teach a class based on this chart. First, it's momentum. Then it's path. Then it's pullback. But Joel, are you in here? You might be napping. If it's a weak top, guys, don't annotate that it was a strong top. Let there be truth in your annotation. Don't write what you wish it was. Write what it actually is. Because there's this weird phenomenon where humans just believe, without question, their own lies. Trade was pure luck. Was long when Trump announced he'd come to framework with NATO. Entered on the pullback. Stops where the market shouldn't go. Half off at 10 ticks. And then, boom, new spike. And I agree 100%. It could have just as easily spiked down. She knew it. Trade was pure luck. Every now and then we pull one over on the market. I love it when you guys do. Strong trending market. Everything says down. Absolutely nothing in the way. Pull back directly to the mid-band inside of large triggers. Like a freaking sniper. Half off at 10 ticks. Where was your second one? Where did it get you on the second one? Oh, man, it looks like you tightened it up more than you usually do, Pete. Usually I see a tail on the bar that gets you about halfway up. Maybe it's a little tighter, but it did everything it said it would. The one time I wish I didn't have a trailing profit stop is Target was down here at the fib, but you can't have your cake and eat it too. I love it. It's just not your money, right, Pete? That's okay. Sometimes it's not. You still made money. I dare you to be mad about it. I was talking with John Novak one day. I do a lot of talking with my brother. and there was a classroom one day where I had no less than 5 people grumble about making $300 on their trades. I only made $300 in 8 seconds. It's 9:15 and I still haven't hit my $2,000 goal. And it was funny, and it occurred to me that when you guys are so stinking good at what you're doing, $300 pisses you off. What a great problem to have. Number one was a little one ticker. Didn't expect price to return to the large. Went down, got stopped out, and then re-entered on the pirate pattern and took the long to get to the short. Nicely done. Nicely done, Ron. Divergence, divergence, divergence. The perfect termination, creating the momentum with nothing in the way. And Pete just jumps the fudge in. Just jumps the fudge in. And it snaps up a little bit because the trend trade is the next trade. And he gets paid. Nicely done, Pete. Nicely done. Momentum and path for the win. Triggers are down. Room to targets. Pull back to resistance. Closes below. And then, man, great stop placement, Victor. It never goes where the market shouldn't. And you sit through some shenanigans. But resistance never changes from resistance. Nothing on your trade changes. They just test your resolve with the methodology. And sure enough, you got paid. And the early exit is because you're exhausted from the sideways, right? Exit trade was getting antsy on the move, should have held a little longer. Are you in here, Victor? I love this hold. It all makes sense. Can I show you one thing that I notice on your chart? From the time of entry, beautiful entry, to where you exited, your small triggers, let's do this a different color just so you can see where I'm pointing. Your small triggers were above the large triggers at the entry, right? And then they worked their way below the large triggers. That's a good look. And then your large triggers rolled over too. That's a good look. And then it gave you odds favorable momentum. There is this awesome progression, Victor, of your trade getting better and better and better. But what happens, and man, I'm so guilty of this, when you sit through all of this, you are so thankful for the $200 because you're like, oh, my ulcer, right? So when you do get one of these holds, look at what your triggers are telling you. Look at how everything is beginning to go in favor of your trade. It's hard to do in the moment, Victor. It really is. So I love the phrase, what changed? It got better. What changed? It got better. I'm holding that mofo. Here we go. Good stuff, Victor. Awesome hold. That's a confidence in your plan hold. Pete had it waiting and it didn't fill. Oh, man. That's frustrating sometimes, but not my money. And then those jerk faces, it hits and fills and stopped out. So your red flag here, Pete, divergence from the 1-to-1 is a bit of a red flag, especially if you don't have the best momentum look over here. That divergence from the 1-to-1, not necessarily a deal breaker, but that is, and I know you're not afraid of using a reversal bar, that is pretty much a guaranteed, I'm going to wait for a reversal bar look. Divergence from the 1-to-1. So the new system, guys, oh, we had so much fun yesterday. Small chart for the automated system is in practice now. And Pete, I was in a trade, and it took me out because of divergence at a 1-to-1 on the system. That's just one of the things that we've noticed. It's a pattern that's come into play, and if nothing else, it's a little bit of an invoker of patience. All right, trend is down. Weak side, room to trouble, pull back to the area, close below, and they just didn't want to go, huh? Price on the right side of triggers, got stopped out with a loss. Still a good trend trade. Amen, Victor. Still a good trend trade. Still everything that you look for to say that your rules are met. And every now and then, you're going to take a hickey. And you did. And it's a small one. 250? Puh. $250 loss in the NASDAQ and the futures markets. It's a pretty solid loss. Triggers down. Strong side. Room to targets. There was your pullback to resistance. There was your close below. There was a white bar following. There was the bar that broke it, full body below. There's your entry. Stop behind the pivot. Target 1, 120. Target 2, just above the zone. Let's see if there's a follow-up picture. Target 1 hit. Nice job, Wayne. Target 1 hit. Let's see if there's another picture. Nope. So let's see. Guys, I was showing this to a buddy of mine yesterday, and I think this is brilliant, Wayne. So I'm bragging about you when you're not near. Momentum with trend, strong side, good loss. Tiny little loss, good loss. It's a loss that fit the rules. The same momentum with trend, beautiful winner. The same momentum with trend, beautiful winner. Same momentum with trend, tiny loser. Momentum with trend, same reasons every time. More winners than losers, way bigger winners than losers. Wayne, that's how you build a trading career. And this self-analysis lets Wayne know if he's breaking rules, because he's not looking at the numbers. He's looking at the advantages. He's not saying, oh, big winner, I'm kick ass. He's saying, I followed my rules. That's the result. Wayne, I love your self-analysis. One of the most important parts of becoming a trader is recognizing the things that are holding you back. Trend is up. Triggers are up. Room to targets. Pulls back to the area. And you make the choice to trade directly into resistance. Right, Victor? Oh, or did it? That wasn't there? Hold on. New one showed up. So you get in on the close above. That zone wasn't there. And easy money. Sorry. Zones were popping up. They do that. So it pulls back to the 1-to-1s, gets above the smalls, and just nothing but the money. Nice trade, Victor. Good stuff. It's weird, man. You're making so much money with trend trades, but you got to learn the momentum trade. Got to use the 15-minute areas. I say that not to tell you what to do, but guys, one of the things that happens is when you post in my room, I really do latch on to the things that are bringing, well, that's cool. Always learn more. Always learn more. Remember, guys, when you learn something new, doesn't mean that it has to go into your trading plan right off. Everything says up, pull back to the area, close above, money again. Money again. I love consistent money. Weak bottom, most of the triggers through, all the momentum, jump the fudge in and see if momentum takes it to the fib. And it did. Nicely done. Let me address that, Victor, because I don't want to sound like I'm like, oh, what are you doing? So I learned the first trade. 3 rules, 2 charts, all I have to think about. Most of you will spend 30 to 60 days learning this trade. Is that fair? Most of you will spend probably 30 to 60 days learning that trend trade to become confident and capable, right? Now I'm live on trend trades. It makes sense. The study went in. You know the pattern. You've learned it. Now I'm going to show you what happens, Victor, and I don't think this is what you're doing, but I want this to be a little albatross for everybody, okay? I saw the momentum trade in class, and I am going to learn it. That's good, right? Let's learn more. I trade the momentum trade live to learn it. No study, no sim, no practice. But since I'm good at the trend trade, I am adding this one to my plan. And this is where people struggle. Because I'm good at this, I'm convinced I'll be good at this, and I don't give it the study that I gave the first one that I'm actually good at. Whether it's that white bar HVA trade, whether it is a momentum trade. And the challenge that happens, and this is kind of what I'm saying, Victor, not, damn it, why are you chasing so much? I want to remind you guys that every time you learn a new trade, give it the respect it deserves. Give it the study it deserves. Give it the feedback in the room it deserves. Maybe away from, because remember that one, 25, simulate 25? Make sure you get it. So that's the mistake I made. So I'm sharing my mistakes, Victor. Add all the trades you want to add, but make sure that you give them the respect they deserve as you do it. Okay, cool. I know it sounds sometimes where I know I'm a pain in the ass. This is not a trade that I would take often, as it would fail more than it wins. It had space to trouble on the small chart, and I could protect the trade with a small amount, so I took the risk. Again, it worked this time, but it's not in my trade. And no, I didn't change my plan. So the triggers are up. You've already reached trouble on the big chart, so rule number 1 not in play. But everything else is perfect, right, Victor? Everything else is perfect. 2 out of 3. Take and manage. That's what you did. You recognize the challenge. You embrace the other advantages. And you said, I will take and manage. And Victor, that's the natural growth process. That's the natural growth process. Medium probability, right? 15-minute up. It's on the weak side. It pulls back to the area. It closes above. Super tight to trouble. Out at trouble. Take and manage. You can't get mad at it. I love this one. He goes, not that one. That's right on it. This one at least gives me some reaction time. Nicely done. Oh my gosh, the hound dogs outside are going full tilt. All right, let's see if this was a cost of doing business. Trend trade long loss. Momentum. Clear path. I like it. Pull back to an area inside of the triggers. Stop where the market shouldn't go. Z-Robot. Cost of doing business. Now you ready for a little coaching? If you want. Some people say that up bar from the perfect spot on the perfect trade is enough to put a stop about 2 ticks below it. And it turns it into like 3 ticks of risk. And if it goes, because there's no areas lower, right? There's no areas for a bounce lower. If this one fails, there's nothing left really to bounce on. If you really want to get back in, you can get back in with a reversal bar. I love, because your entry is perfect. Your chart read is outstanding. Everything about this makes complete perfect sense. That's just a way to turn losses into smaller losses using that reversal bar up. And here's another little deal on the NASDAQ. If you see these small triggers acting as resistance, it's not going up until it gets to the other side of them. So if you get in on the perfect and you see it bounce right off those small triggers, because remember, these small triggers are the small triggers from the 13.2, right? That market won't go up until it closes on the other side of it. So when you see that the market can't get through them, there's a good chance they're going to act as resistance. And you can just say to yourself, well, I tried, it failed. If I get another bar that closes above, I'll give it another shot with that perfect look on the large chart. But if you never get it, you never take that trade. And that's kind of unique to the NASDAQ, guys, because the time frame is so much bigger. But that's the perfect trade. You did it flawlessly, Robot. All the momentum, all the clear path, pull back to the area inside of triggers, perfect stop, making money, and there it is. Good job. And Pete, is this Pete? See the divergence from the 1-to-1? And it pushes lower? Put that on your radar. I think you'll be glad you did. I think you'll be glad that you did. Let's see what we have here. It's in the vault. I dig it. Trend trade up. Room to targets. Pull back to an area. Close above. Get paid. I mean, my goodness. Who was this? Is this you, Victor? Beautiful. Beautiful. Sure, Adam, let me know when you're back. Let me know when you're back. Rockstar, Victor. Same trade. Exact same trade. Different market. Triggers are up. Strong side. Room to trouble. Resistance becomes support, and it pulls back to support. Support becomes resistance. Uh-oh. You take the close above, and it works out beautifully. Take and manage, right, Wayne? This is you. Or is this Miss Trina? I think this is Wayne. You traded directly into an area of resistance. I'm not faulting you for it. 2 out of 3. Take and manage. Nicely done. Another trend trade. Did not take this third close above small triggers in the forbidden zone because of this. I could have entered and pushed it to 1-to-1s, but why? I took plus 310. I don't know what the forbidden zone is. Oh, you're trading inside? So you're in the middle of a zone. And you said, man, if I would have broken my rules, I could have made some money. And you also could have lost it. Could have gone either way, right? Could have gone either way. That one happened to go up and then just crash violently. So, telling you, these zones are solid. And you see that big tail right there? And this is after the fact. You'll see these a lot when they're trying to get through and they just can't. It's a good read, though. Take and manage, guys. When you start winning more than you lose, take and manage makes sense. All right, I think this is atoms, so we have to hold off on atoms. Up, strong, room, pulls back to the areas, closes above, and then you get another close above, and have decided that this is safer. And it goes right where it's supposed to go. Nicely done. For me personally, and this is just me, if I get in here, my stop still belongs down here. If I get in here, my stop still belongs down here. So either entry, the expectation is there based on the large chart, and it goes right to the expectation. Nice trade, Miss Trina. Everything says down and there's nothing in the way, so why not just jump the fudge in and get paid? Told you guys, you're going to see a lot of those. Nothing in the way, tons of room, everything going the same direction. I'll try and go the same direction with it. Good stuff. I mean, this is a mess. I can't even see the tops of the previous bars or the bottoms of the previous bars. Market is up. Looks like it's above trouble. Pulls back to an area. You get in on the good side of the triggers. Maybe. I don't know. I don't see entries, exits. Looks like you won. Good job. So entry should have been here. I don't have a rule that says the entry is there, Wayne. Are you in here? I don't have a rule that says the entry is there. And I don't have a momentum trade because I don't have momentum. And this is resistance along with the 1-to-1s because everything broke below it. So honestly, man, I don't have any rules for it. Close above for trend trade. Is that the only small chart rule for trend trade? No. Clear path, Wayne. Not trading directly into an area that is behaving as support or resistance is rule number 2 for the trend trade. And this one, here, let me bring up this picture. And I don't know if you've been in class for this because you're usually building hot rods, which I'm still jealous. But this picture right here, this is a good one. And I think you already know this. It's resistance until a bar breaks above, and then it's support. And it remains support until a bar breaks below, and then it becomes resistance. So on yours, it's resistance, and then it becomes support, and then it becomes resistance again. So this close above the small triggers is what we call the prairie dog. This is the, I sure hope it goes up look, right? I'm not trading from an area of support. And then it goes up, and now it's support. And honestly, that's your close above. But with the small triggers going your direction, once this is behaving as support, have fun. You already got a reversal bar with it. It's just super tight. Does that make sense? So can you take that one? Yeah, it's probably going to lose a lot. But once this becomes support again, it becomes an easier trade. It's just really tight. It just becomes really tight. That's kind of the idea. It's even harder because there's not a lot of momentum pushing it. If there were better momentum, it would make sense. I like it. It's just somewhere over here, if there was more room with the triggers still up, makes it easier. So you could mitigate risk a little bit because now this is support. And you could just say, man, I'll get in here and hope it holds and put a stop. So good trade. Good chart read, even without the trade, really. Counter trend, white bar really shouldn't work trade. Not a trend trade, but knowing what a trend trade looks like is needed before seeing these trades. Thank you for the disclaimer. Divergence, pink 1-to-1s, triggers roll up. More often than not, this multiple divergence pattern, right from trouble, makes it to the reversal bar marker. Ron has found a way to capitalize and turn it into a trade that suits his needs and fits his plan. Good job. All right, Phil. Market hits support. Smalls get above the large. Entered at white bar break POC. I don't know what that means. 61. Did it open above the HVA, Phil? Point of control. So that's the key, right? Opening above. Good patience. And it looks like this one might have qualified too. And sure enough, it goes to trouble and you get paid. And at this point, I don't see a stop, which means you're probably at break even, which is brilliant. It's counter trend. I hit trouble. I'm not willing to lose. I love it. I hope it went for you. Nice trade. Good execution, man. As you study this trade, you really are getting more and more consistent with it, which is awesome to see. All right, let me see where we stopped off. All right, Adam P., are you back? I'm not sure if Adam P. is back. So Nathan, let's go to school, brother. Bum, 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 bum. Miss Jen, you're back with us now? Thank you for reposting those. Adam, I believe, is still out. It does take some study time. All right. Mid-band, not a term because no gap theory. Awesome. Good job, Nathan. Since our entry is so high up in the large triggers, does the stop really go or is it different? So, Nathan, the question is, do you want to pick a number or do you want to put it where the market shouldn't go? So the very basic says this could retrace all the way down to there, which means the proper stop placement is all the way down there. And now, Nathan, we can probably agree that's a lot of risk, right? And maybe not as much risk as you want to put on that trade. Cool. So let me show you the other option. I know that it could go from the mid-band, but I also know that it could retrace all the way down here, and I never know what's going to happen. So if the market provides me a reversal bar in the direction of my trade, I can put my stop 2 ticks behind that reversal bar, and then if it decides to retrace down 5 points, I'm not giving back 7. Does that make sense? And one of the things, see how your small triggers just never even blink. That mid-band was a great spot. Of course you could re-enter. You wouldn't be entering from an area inside of triggers. So you would be breaking rule number 3. But that's it. And that's one of the ways you can circumvent huge risk. You can force the market to go in the direction of your trade and put your stop behind it. And one of the tricks Wayne used to do when he was on Renko bars is Wayne would say when it gets to the mid-band, I know the mid-band can hold, and he would put a stop order at the top of the previous bar and go ahead and put a stop below there, because now what he's saying is this is the bounce point. It's starting to bounce. It's either going to go or it's not. And since there's the potential for so much risk, and that was pretty freaking clever, and it worked often for him. Good chart. Great large chart read. Not a trade just for illustration purposes. Lower divergence, stay out of trades, right? And if you're in a trade, get a lower divergence exit. So let's talk about it. Let's talk about it, Nathan. I love it. I love that you're thinking like this. So let's say, hypothetically, you take this long right here, right? And can we assume, for the sake of argument, the large chart is perfect? Because that's the most important part, Nathan. The large chart is perfect. Cool? When this second divergence prints, that's an awesome exit condition. Because the reality is it could push way down here. Second lower divergence is a pretty strong indication. Now let me show you the other side of it. Because the large chart is perfect, if I get a reversal bar from an entry point after a second lower divergence, I can re-enter the trade and see if they want to continue. And hold on. Boom, 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 boom. Doing a lot of boom, 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 booms lately. Where is it? There you go, Nathan. Something to read. It's everything we just talked about, written out, couple examples in there about second lower divergence. And one of the pictures in that, and it's pretty cool. Yes, I can get back in with a reversal bar. And if I never get the reversal bar, I never take that entry. So if it does just push into outer space, I don't become a victim. That was written quite a while ago. Not a trade, just for... I love that you put that disclaimer on there. What if a fib is at the very end of the entry window? Less likely to succeed? Why? All it means is that you have low risk. So what does it mean if the fib's at the bottom, right? So if you're using the language, my best entry comes from an area, whoops, inside of triggers. If your area is up here or your area is down here, they're equal. Doesn't matter. Doesn't matter. Well, this is a 50-50 trade. This doesn't have strong triggers. It's doomed from the beginning. I disagree 100% with you, Nathan. That's an opinion based on you getting run over once or twice, deciding that it had to be that. But I think we've already shown that when you lost this trade, chances are your large chart wasn't perfect. Chances are you didn't have a clear path. Chances are maybe the momentum wasn't the best, right? So I need you to not base most likely scenarios based on trades where you most likely broke rules. It doesn't matter. So the entry methodology, and I love these questions, and dude, you are 100% gold star, rock star status in my life right now. Let me see if I can find a good picture. Here we go. So check it out. Pull back to the area inside of triggers, right? Fibs, midbands, yellow, 1-to-1s. It doesn't say pull back to an area inside of triggers only if it's close to the top. Pull back to an area inside of triggers only if it's not too close to the bottom. The methodology is so specific that it's pretty cool. Trigger lines, all they do is they define where the retracement has the best chance of going. That's it, right? Areas inside define where it has the best chance of bouncing. And that 1-to-1 isn't any more special, or that midband's no more special than the 1-to-1. And the reality is I have no idea which may produce a bounce. Either could. One of the cool things, and this is one of the pitfalls that people do, is, Nathan, they say, well, if I get in down here, I'll have less risk, right? And you wait for that lower area in the triggers because you're like, oh, risk is freaking scary. The reason the methodology tells you that your entry is at the highest point, Nathan, is because if you're taking the right trades, your large chart is running like a scalded dog north, right? And your large chart doesn't have anything in the way to create a bounce. It's so freaking good. I don't want to hope it goes to the one-to-ones. I want to make sure I don't miss this trade because the methodology lets me know exactly where my advantage is gone. And man, I know it's easy to get focused on the number for the risk. And I've said this a million times. Risky is giving up advantages. Risk is not a number. Risky is trading into areas. Risky is getting in on the wrong side of triggers. Risky is not having momentum to push a market. So you don't want to form those opinions. You want to make sure that you're consistent in the methodology. Good stuff, man. Great questions. When divergence recently stops printing, is it fully gone or can it still count as a turnivation? Since the divergence is gone, is this a fully clear path? Well, price reached divergence, didn't it? Are we talking right here? Oh, I see what you're saying. Yeah. Divergence will stop printing when it's no longer needed. So the software will make it stop. But Nathan, can I give you the other side of that? You knew without question that there was a line present for the last hour and a half that could behave as a termination condition, right? I respect it a little bit. Even if it's one bar missing, they created it. They know it's there. So I still use the trigger looks to help me out a little bit. Technically, it's not there. Good stuff. Strong trending market. Room to trouble. Didn't enter at the reversal bar marker on this occasion. Was not in front of the computer. So you caught it late when it still had room to get there. And it got there. Nice trade, Jen. Late entry. No worries. Everything's going your way. Pullback, reversal bar, get paid in a strong trending market. Keep buying that mid band till it doesn't work. 2 for 2, Jen. Momentum. No momentum. Where are we getting in? Okay. Waning momentum, clear path, perfect entry. 2 out of 3. Take and manage. Nicely done, Jen. Jason's amazing. That's awesome that he took care of you, Pete. He always will. Jen, do you have any questions about these? Because they're all just great. They all make sense. They all lean on advantages. They're all focused on getting paid when it's time to get paid. I really feel like that's pretty solid. Just showing off today. I love it. Mama got a new dress. Momentum. Clear path. Divergence from one-to-ones tend to have a greater reversal. Got in low. Worth clear path on the large chart. Entered at the fib. Stopped just below. Who was this? Was this? Whose chart was this? That's you, Jen? Great patience. Support with 4 triggers above. Odds favorable momentum. 2 out of 3. You took a chance based on the rules of termination conditions. And you managed it assertively. Nice job. I see you've adopted Pete's 10 ticks trailing stop. What if there's a termination condition at the very top of large triggers? Does the window stay there? Another good question. You've studied his work? All right. No offense, Pete. Jen, are you sure you've seen everything he does, or only the ones that work? Are you sure you've seen all of his trades, or just the one? Just the ones that work, that look good in the room. And Pete, I'm not accusing you of anything. But this is a big deal for you guys. When you want to be like someone in the room, I will tell you from my experience, 90% of the people in the room only post winners. You did today, Pete. It's the first one in a month. Come on. 90% of the people in this room only post their winners because they don't want to show losers because they think that they're failures. Guys, losers are where things win. But if you're going to latch on to somebody, right? And I'll show you how this happens, and then I'll answer this question. Hey, Mark, look what I did. Oh my gosh. I am so freaking awesome. Have you seen me? Look at all the money I made. But if you look over here, there's a loser, and 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 their P&L is negative 25,000. Look at my winner. And we're all guilty of it. Don't act like you're not. But guys, this is common. I look over. You guys remember when you used to post charts in the room and you're down 700, but you show me $1,000 winner? And I ask you respectfully, where's the other money? What happened? How do we fix that? And Wayne's right. Losers are where you learn. Losers are where you learn how not to give away money. I love that. You're either winning or learning. Win it or bin it. So just throwing that out there. And Pete, please understand I'm not accusing you of anything. You just happen to be the person that she's studying. It's like trying to do what John Novak does. John Novak shows a fraction of the thought process that goes into what he does. He makes it look easy because it's his plan. Most people blow out accounts trying to be John Novak. All right. Nathan, seriously, dude, I don't know if you're old enough, but I'm going to buy you a beer one day. These are the best questions ever. So what if there's a fib at the top, right? Mark, what if there's a fib at the very top of the window? Here's my 2 cents, Nathan. We're expecting areas inside of triggers to create a bounce, right? That's the whole point of the area inside. If the reversal bar that starts your pullback finishes below that fib that I'm hoping to create a bounce, Nathan, that fib did not create a bounce. That fib is not where the market bounced up to continue. And I instantly look lower. And suddenly, I don't have areas inside of triggers. Pretty cool, right? But now it's the whys, not just the it seems sketchy. If I walk through a door, that door didn't keep me out. That's a good question. That's a good question. So if my reversal bar marker is below that fib, instantly I start looking lower. I love that question. Momentum, 3 triggers through, strong bottom, no divergence. Oh my goodness. Was it going to be the one-to-ones? Maybe not. Could we put a limit order just above support inside of triggers and say, because of this look, because of these conditions, because there's no divergence, because of the pullback, because my methodology is so much cooler than I'll ever be, that's where the market is most likely to bounce and continue with these advantages. Pretty awesome, right? We showed up late to the party, but clearly that one-to-one's not the bouncy thing. It's going to have to come get me here at 79. If it gets me at 79, my stop will go 5 ticks below these triggers, and that would be 71. That's where my stop will go. And if they can get through all the good stuff, that's where I miss. That's where I'm no longer in the trade. 77, 79, 2 ticks above, no divergence, strong triggers, strong bottom, odds favorable, room to trouble. Oh my goodness. This particular trade would fit the KISS plan 100%, which means I'm obligated to take it because I trust my plan. Did you guys know that I am no longer in control of whether or not I get this trade? It's the selling forces that will determine whether or not my entry is hit. And then I'll manage it according to the KISS plan, which means that my initial stop will go 5 ticks below the triggers. My first target will be $100. Oh, come on. Give us the fill. We're going to spend $1. My first target is $100 away from my amazing entry. My second target is $200 away from my amazing entry. Now, according to the KISS plan, if a lower divergence prints, I'm obligated to exit my trade. That's the management plan. So until I either get stopped out or hit my first target, I have absolutely nothing to do. Is everybody with me? First, it's momentum. Then it's the potential to break. Because of the strong bottom, because of no divergence, I take the pullback to the area inside of triggers, stop where the market shouldn't go, have about $180 risk on this particular trade. Targets are predetermined. I'm learning how to manage trades right now. I'm learning how to put my stop in the right spot. I'm learning how to keep my hand off of the mouse until my rules say it's time to touch the mouse. Adam, was it just the 4? I'm on the track to log the 25 perfect trades. I start to number the trades and show results when I'm done. Can you please certify each trade? Otherwise, they will not count. The goal is to only trade the perfect trades. I'm okay with 3 triggers through with the management and all the other rules true. All right, so you're going to take 25 perfect trades, but you're not going to allow them to be perfect. I love that. I love that. I'm going to take 25 of the perfect trades, but I'm not going to let them be perfect. So do you want me to certify the 50-50 trade? Or do you want me to certify the high probability trend trade? Or do we need to talk through them and make sure that we know the difference between the two? I want to give you exactly what you need out of me. But your language says high probability, and then it changes direction to medium probability. Are both on the table, Adam? Okay, high probability trend trade is not 3 triggers through. Ron, have a good one, man. I'm sorry, man, a lot of you guys are going to get cold. It's going north of us, thank goodness. And Adam, I say that because that's a high probability trend trade. Clear path. Otherwise, it's a medium probability trend trade with a different set of entry instructions, with a different plan for management. So when we look at yours, we'll make sure that it's high probability. So waning momentum, not high probability, because you don't have separation between the small and large. Clear path is in play. Pull back to the area inside of triggers. Profits, exit with second lower divergence. Beautiful management, Adam, on a medium probability trade because it doesn't have the momentum factor. Does that make sense? So trade number 4, not perfect, but I'll take it anyway because of my chart read. Awesome. They're just sitting there, aren't they? We'll check in on it every now and then. Momentum. Not 4 triggers through, Adam. Unless, where did you get in? It's hard to tell. So you got in here with 4 triggers through, but your momentum went away, didn't it? You had momentum over here where you pointed, but where you actually got in, your small triggers had already turned up against the trade. Do you see it? So rule number 1 not met. You did have an area, you did have a clear path, but because you don't have the momentum, which bar did you get it? I don't know which bar you got in on, 43. So you got in here. Okay, so it wasn't a clear path because your large trigger line is still above the yellow 1-to-1s, which means that it's medium probability, which means that these weak triggers mean that it's more likely to push up, and it pushed up. Push up it did. Does that make sense? See that trigger line still above? So you're cool with 3 triggers, but Adam, if you really want an advantage with 3 triggers, you got to have strong triggers over here. These are weak. Anything can happen. This is where stuff pushes up. There's a reason that 4 triggers gives us warm fuzzies. And there's a reason that in the KISS plan, strong triggers on the small chart is one of the rules. So good lesson. Not certified as a perfect trade. Man. Whew. They're threatening us. Odds favorable. Clear path. In a little bit early. There's your perfect trade. There's your perfect trade, Adam. That's the one, and I'll be darned. Both targets hit $300. Isn't it funny how little things can affect the outcome? Nice trade. Even with the high entry, really nicely done. Momentum. Clear path. Pull back to the area inside of triggers. Well, entry was high again. And it goes right up. Nice trade. Great trade, Adam. Momentum and path. Pull back to the area. You cost yourself the extra $50 by getting in that early. That's textbook. Everything about it. So 250, perfect trade. 300, perfect trade. Broke the rules for the 50-50, $300 loss. Didn't have the right momentum, you make 100. The difference between a $650 day and a $350 day. Loss of momentum to me, Adam, is less derogatory a thing than weak triggers on only the potential to break. Because when the path is clear, with a good entry, a lot of times you can circumvent that slowing momentum, but you can't ever make that area broken. Good trading. Nice job. So for the perfect trade, 2 out of 4. Does that make sense? We lost. For the perfect trade, 2 out of 4. Fair assessment, I hope. And guys, here's the cool thing. If you don't ever dig my comments or you're like, man, but, and guys, throw your butts at me. Let's talk about it, because sometimes you guys see stuff. Sometimes you guys see things and you talk about things, and I'm not going to lie, you guys are smart. And you may not know that what you're doing isn't as far out of line as you think it is. And sometimes we get better at stuff together. So if you have a contradicting view, at least share it, and we'll talk about it, and we'll go, all right, well, let's see what we have, right? We did that with Wayne's trade that wasn't like 100% perfect, But then we started looking at the different factors. How do we make it a much better trade? And I think that's pretty cool. Was it a trend trade? So pop up. This is what I need from you. Okay? You ready? Here we go, brother. You'll never ask this question again. Were the triggers up? Trend is up. So we've defined the trend. From where you entered, 05, 05, did you have room to trouble? Looks like it. Rule number 1 met? That's okay. Work with me here. Did it pull back to support? Yes. Did it close above the small triggers with an up bar? Yes. That is a beautiful trend trade, Papa. Does that make sense? And it has nothing to do with what happened next. It's just a trend trade. It's 3 very simple rules. And you're absolutely right. That would have been your entry. But the triggers, okay, so here's where the lesson gets to come in. It's not triggers reach support, it's price reaches support. So there's our little clarity. Price pulls back to the area. The triggers don't have to make it. Awesome. Sorry, I had to read that 3 times before it actually clicked in my thick skull. Triggers don't have to get there. We let price get there. But look at this. Price reaches it, and it doesn't go. And it's there, and it doesn't go. And it's there, and it doesn't go. How come? We didn't get the close on the correct side of the triggers. But once we did, it's giddy upsville. Good stuff, Papa. Great question. These are the charts like this with these awesome questions that take some of the ambiguity out of it, that get you to that next level, because we all wonder things. We all wonder things. All right, direction down, weak side, odds favorable momentum. Your entry for area was the HVA. That's a momentum trade, Phil. That's a momentum trade. So there's 2 ways to do them. In the KISS plan, it says be on the strong side of the triggers on the large chart. It gives you a definite advantage on momentum trades. But yeah, that's the perfect momentum entry. So once you understand how the entry works, everything else falls into place. Good job. Good job. And for you guys that are studying momentum trades, there's some pretty good pictures in there for you guys. I don't know if you knew that. I went through when we were building the plan and I stole some pictures. So those are really good to look at as you guys start incorporating new stuff. Holy Wayne, what am I supposed to do with this? So is the trend trade entry close above triggers bar but huge risk with short potential? And would you consider this a low risk trend trade or a momentum? But would this have been a momentum entry before trend trade rules met? All right, I like it. Let's get them all. So here's the challenge, Wayne. And I'm going to try to address these one at a time. So let's go bare bones, right? Compression, spark, and gas. What's a trend trade? A trend trade is a pullback to an area that is behaving as support for a long with a close above the small triggers. That's a trend trade. Cool? So it can't be a momentum trade because it doesn't have momentum. Are you with me so far? So this is resistance, and then it becomes support, and then there's your pullback to support, and that closes above the triggers, and that's textbook. There's just nowhere to go. You with me so far? because I know how your brain works. This bar that doesn't have enough room is the beginning of your trend trade, right? And your expectation is that it's going to close that gap and hit resistance. And your stop right there where you put the rectangle. Wayne, do you remember that trade that you used to take where it pulled back to the small triggers that were up? If you choose to let it come back to the same support that you traded from, it doesn't affect your stop. The only thing it does, Wayne, is now in the exact same trend trade from the exact same area of support, now you've got some room to make cash. Does that make sense? That's you just saying, man, the first entry sucked, but I like the trade. If they give me a retracement, I'll take a better entry because I know where my stop belongs. It's just a better entry. I would say it's a better entry trend trade. It's having the market giving you rules met, but you didn't like where they were met. It doesn't change the fact that it's a trend trade. It doesn't change the fact that the target's in the distance. You're just getting in lower. Right on. So management technically is below the pivot low, which didn't happen till over here. So until this one happens right there, your stop is down here below this white bar. And then you could say, all right, I'm already pretty deep into it. If they get back below this area, it's probably not working anyway. And right where you have your stop makes sense. Does that make sense? Cool. I like, when I'm going to say, okay, I'll take the better entry, I like the small triggers in the direction of my trade. And very often that snap back to the small triggers is a pretty sexy entry. So everything is up there. Let's see if we can find an example. Everything is up, right? There's my entry. So once I get this entry right here, this is my target expectation based on the rules. This is where my stop has to go based on the rules, right? So honestly, I could get in here. I'm just increasing risk. I could get in here. I just have less risk where it pulls back to it. And then when it goes back up, now I can use that as a stop, right? And it's going up and everything is good and it pulls back and goes back up. And now I can use that for a stop. So letting that retracement happen and then the continuation is cool, but anywhere you take it, and the further away you get, the more difficult it is to manage. So taking those really late entries, it does create a little bit of a challenge because if you're going to be truthful about where stops belong, that's it. If I get it all the way up here and I say, well, I'm willing to put $200 on it. Very often, late apex the quarter. That's it. This is where the late entries, people have a pain threshold, not a where the market shouldn't go threshold. Good questions on there. Better drive down the straight. It is. Top speeds come on the straightaway for a reason. Good questions, guys. Awesome stuff. There's where we got run over. Only the potential, right? Potential didn't work. Yeah, guys, that was the perfect trade. It just didn't work. Momentum, path. I don't have an area inside of triggers. Chris. Are you making a commentary on something, Chris? Or are you just having fun? Oh, maybe your chart? It might be. There's a good, that's funny. I love it. Chris is good, people. Chris T's in here. Haven't seen you in a while. What's up, bud? Good to see you. Look at Nudo. Haven't seen you here in a while. Good to see you again. Izzy got game. I've realized something, guys. When you guys come back to my room, it's for one of two reasons. Either you're bored. Actually, three reasons, right? Either you're bored and you just want to hear someone talking, and that's totally cool. Trading is lonely. Maybe you need help. It's okay to ask for it. Even no matter how long you've been with me, it's okay to ask for it. Or maybe you just like the way my voice sounds, and you're like, man, I can't wait to hear those golden pipes. And that's okay too. I get it. Just kidding. All right. Only the potential. Divergence prints. Son of a gun. Do you guys see it? Potential to break with no divergence. It went a little bit. With divergence, it didn't. That's a pattern. That's a tradable, repeatable, understandable, predictable pattern. More often than not, divergence kills a 50-50. What would you guys like to talk about? Are they going to give us momentum and path and apologize for the way they did us wrong? They sure did. Did you guys know that when a 50-50 fails very often, you get one of these bad boys? Not always, but sometimes. I'm doing great, Licanito. I am absolutely living the dream. It is wonderful to be me each and every day. Each and every day. Oh my gosh. Did you guys see this? Did you guys see this? Cam says free $50,000 evals up for grabs and gives instructions on how to get there. Go to Instagram, go to X, like the post, repost it or share it on yours, tag a friend. How cool is that? How cool is that? If you have an Instagram account, I don't know why you're not doing it. Hell, I'd build one for that. You don't have to do X. You can do Instagram. I don't have an X account. I don't like that much politics in my day. But Instagram works. It's an either or, not a both. So Nathan, great question. You ready for hopefully a good answer? And I'm going to do it a couple different ways. Let me see. Okay. Here we go. A divergence low or a divergence high is a 100% exact number created where the other side took over. Has to hit. Okay? Divergence lows, divergence highs. Yellow 1-to-1s are 100% Fibonacci alternates. For me, they have to hit. That's just me. So something that is created in such an exact manner, I want it to hit it. I want it to make contact with it as a very basic rule of thumb. You can see they hit it to the tick down here. But when we talk about fibs, and I'm sure you've seen this picture, maybe not everybody has. When you talk about Fibonacci, where's my picture? There it is. You're talking about red and blue lines that are created from analyzing every pivot and swing in the market for the last 10 days. Lower time frames, higher time frames, synthetic time frames. And then using an algorithm to weigh them out to support resistance, using concentrations. Oh, it's amazing. But what it means for you is that these lines, they are areas. So you can see sometimes there's a little bit of run over. One of the reasons it's triggers, not price. Sometimes they're to the tick. Sometimes it's a couple ticks over, right? Maybe a tick under. And sometimes they almost make the fib. That time they want to tick over. So they're good. But sometimes they'll almost make the fib. And when they almost make the fib, I thought I saw a picture of it a minute ago. Hold on. So here we go. When they almost make the fib, what I'll do, see how it didn't quite hit it, Nathan? It's like a tick off. This is where I'll look at my small chart and I'll say, well, my triggers are weak. That's an indication. Divergence printed, that's an indication. So if I'm a tick off and this isn't just flying out of its shoes, I'll say, all right, that's good enough. And I'll skip that one. Oh man, have fun with that. How long does it take to wire a Daytona? I was wondering this yesterday. Will you spend like a week on it, a month on it? That's a lot of wires. I mean, it's a race car, so there's a lot less. About a day. I found that I could wire a total loss system on a motorcycle and have it done in, an afternoon, but I figured a car is a little more difficult. So that's one of those things that I'll look at. Oh, right on. So laptop open. I peaked at carburetors. I can do timing. I can fix points with a matchbook. Good question, Nathan. So like that one, I wouldn't worry about the fib. I'm like, man, it's still 4 ticks off, strong triggers, no divergence. I like that one. Dude, you are asking great questions today. Great questions today. What are these guys doing? The triggers are up. There is about 6 points to trouble. Oh, right on. Man, we have solar at our house in Austin. I haven't had a bill over $70, even going through the summertime. Whatever I finally build to Diane, we'll have solar. All right, guys, what do we want to talk about? Good stuff. Turning it off to move it costs, yeah. Turning mine on was more expensive than the first 5 bills combined. The electric company gets theirs one way or another, don't they? All right, guys, I'm going to shut